Welcome to Core Finance. I'm Gaurav Sharma. I'm an independent oil analyst and a columnist for Forbes. It's a very interesting session and we're all set up for this week. I think the key theme as far as the oil markets go is that we had a bit of a sell-off last week, and if I could have the first chart, looking at the first chart, that tells you all that oil is a little bit volatile, but it's staying within the $60 to $80 range. Each time it tries to plummet below 60, there is no really a factor that's dragging it down further. So essentially it comes right back up. Each time it tries to break out beyond 80, again the same issue occurs. So essentially what you're having is that the price is staying within range. Now within those confines and in those parameters, what you're seeing right now is that the oil volumes are solid. We have the specter of perhaps some trade wars, or at least it's factoring into the sentiments. Overridingly, the market thinks that a trade war may or may not happen, but it is still impacting market sentiment. So there's the specter of trade wars. There is the global economy, which is in a good place, but it's not quite firing up. And those factors are coming in to what OPEC has done is to rebalance the inventories. Of course, now OPEC is a little bit all over the place, courtesy the Americans, that they want to prop up their production, and that is also factoring into the wider sentiment. So what the problem the oil market is facing right now is that there is no breakout factor. Each time it tries to escape 80, it drags straight down. Each time it tries to, the floor is breached below 60, which has not happened of late, but did happen last time around in February, as the chart suggests. It comes right back up. So we'll keep oscillating in the 60 to 80 range because there is no breakout factor. There is still a sufficient amount of oil out there in the market, although one caveat I would attach is that investment into new upstream facilities, into new exploration production plays is actually down to 2014 levels. So that is a concern, but not a concern for the next 12 months. So I stick with my usual forecast on Core Finance TV is that we will probably average around $70 to $75 for Brent and $65 to $70 for the West Texas Intermediate. Now, interesting week again. We had the whole issue of the mother of all IPOs, the Aramco IPO, that's what I'm talking about. And of late, we've had some news, especially over the last sort of 12 to 24 hours, is that there are some rumblings in the interior as far as Riyadh goes, is that they have, quote unquote, postponed the idea of an IPO. Now, postpone is a big word. They're saying that they're putting things on ice. Now, viewers of this broadcast would recollect that I've always maintained in various deliberations on here is that IPOs, by their very nature, require a level of disclosure. It is something that Aramco over the years, especially the last 2 decades, has not been particularly comfortable about in terms of their reserves, in terms of where their journey is progressing. Now, whether they were thinking about London or New York, they're only the 2 big games in town, the level of disclosures both exchanges require would have needed some Saudi cooperation in terms of data and so on. And I think that did not sit very comfortable with. So I have always maintained that this IPO remains dicey, and I feel kind of vindicated that the news in the last 12 to 24 hours has been that they've put it on hold or they've postponed it, whatever terminology you'd like to use. Now, closer to home, there are 2 oil and gas small caps that I'm looking at. One is Highlands Natural Resources, and the second one is Rockhopper, an old favorite. Starting with Highlands first, they had their AGM this week, and the share price is just about touching 20p, and my 12-month forecast is that it should be nearly double that. And the reason for that conjecture is that at the moment, it offers investors a gateway into the Colorado shale, which is a very lucrative play. We're talking about at least $4 billion worth of business there in the immediate short near term. Now, as far as Highlands goes, it's a producing company. It's producing about 5,000 barrels per day. That's not huge, that's not massive, but it's a revenue generating company. Secondly, they've come up with a technology called DT Ultravert, which is something they've patented, which is based on the premise of enhanced oil recovery. Now, for the I beg your pardon, the share price to touch 40p, DT Ultravert has to be monetized by this company, and I'm quietly confident that the management are on the money. So which is why I forecast near doubling of this price. The usual caveats apply. If there's turmoil in the oil market, they might get impacted. And the second play is Rockhopper. Rockhopper is an old favorite, but it's come back to the fore because Argentina has a much more conducive investment climate right now. Even though President Macri is having some domestic problems, it's a lot better than the previous administration. So these are my two oil plays, and that might take on the oil price and of course the Saudi Aramco kerfuffle. Thank you.